Hello traders, Gary Wagner here, approximately 9:30 in Honolulu, 3:30 in New York on Tuesday, 9th day of June 2015, and this is the daily report for gold and silver. We do have the precious metals moderately higher today, and unbelievably the dollar has very little to do with it either way. The dollar is actually flat today, first to gold, currently trading up about $2.80. Now, in terms of where the market's been, the high has been 82.30. That's important because we had a stop at 81 for those that lowered stops rather than pulling profits. Low today has been 71.80. Currently, we're trading up about $3 on the day, 11.76 and change. Now, as far as silver goes, silver actually has remained under pressure. We did move our stop down to 16.25. High in silver is 16.13, so that trade is actually still active. We've had a low of 15.90, and our current print is 15.93 and a half. We'll talk about silver in a little bit. So traders, the first thing I really wanted to talk about, and especially having the gold stop now hit and offering you, our subscribers, different strategies in the market, I really wanted to highlight kind of my thought process behind Sunday when I sent out this special trade alert in which I offered the option of either simply pulling profits in the market where it was or simply lowering the stops. And to do that, I want to pull up the chart. This is actually the chart that we sent out during Sunday's trade alert. And when we did that, let me get my pointer up here. But when we did that, I believe that the market had about 2 bars. It was roughly right here. And you can go back and check the chart that I sent out. But I believe it was either there or maybe one candle over. And the key was that I made a decision. Even though we are trend traders and I try to capture the majority of the market I can, as this market's moved into a choppy or a narrowly defined trading range, in order to maximize profits, we really have to be more sensitive to the smaller moves in the market because we're not getting these, $200 rallies, $150 rallies. We're rather seeing the market move roughly $50, $60 in one direction or the other. In fact, the next chart we'll look at is the channel chart in which I think we can chart the range that we're seeing within the market. But as I looked at this market and we saw that we definitely had a defined trend that it had been moving down, we had been short. No doubt about that, but we also noticed that we got that pivotal candle, and that was followed by this green candle. And when you look back, you absolutely, and this is why I labeled it as a choice, you can have a scenario such as right in here, in which the market moves down, and then you get that pivotal change to green. However, it's really what I tend to call a false positive, in that what we're looking at is the market, in essence, just consolidating before moving lower in the market. In other words, the trend is going to remain. We're not really seeing a pivot reversal. We're looking at consolidation in the market. And so until the market really genuinely takes off, or if it's going to take off, we don't know if it's that consolidation that we're looking at, or rather we're looking at a key pivotal reversal. Now, the same can be said for what I witnessed on Sunday, Monday, of course, in Australia, in which we did have this market give us those signs of a pivotal reversal, but we didn't see any kind of a spike up at that point in price. And in fact, yesterday we had the market basically moving sideways to a little bit higher, but not that much activity. Now we see, in hindsight, that point was the point in which the market really began to move back to the upside. Now, where's the market headed from here? We'll talk about that in a second. But what I want you to realize is that the best I can do as a market technician and as the producer of the gold forecast is to make you aware of any nuances that we see in the market so that you can act accordingly and take that information, adjust that to your personal trading style, and hopefully maximize profits from that call. So therefore, what we're looking at, I believe right now, is the market simply trading in a channel? And let's go ahead and pull up another chart so you can really see what I'm looking at. And that would be this chart. It's a daily chart. In this chart, what we've in essence want to concentrate on is the fact that we can see a fairly defined down sloping channel. No doubt about that, ever since the market hit about 1230. Now, we also talked about the fact that we've identified a head and shoulders position, so that's another reason we're looking for lower pricing. But this channel is absolutely, without a question of a doubt, convincing us of that. So if we look at this as a channel and we see that this is the top of the channel, these are those highs that it hit, and then you can see over time it goes to the bottom of the channel, back near the top of the channel, then near the bottom of the channel. My sense right now is that in the immediate future, we are seeing a play back to the top of the channel. So although I am not bullish overall in the market, I do believe we could see higher pricing ahead. And that's just based upon how this market, how the price of gold has been moving within this defined down cascading channel. So traders, I did want to take a look at silver and look at our overall outlook. Of course, those same choices were available to you. And this is another reason really that I'd rather present these as choices. There is no definitive right answer when we make these early notifications. In some cases, for example, gold, it was certainly better for you to pull profits at 72 than at 82, the difference between $10 and $20 in profits. In silver, though, we are still active for those that simply lowered stops. We have stops now at 25. The high has been 13, so we are still actively in that trade. And so there is no right or wrong answer until it actually unfolds. And so my best opportunity, the best opportunities I can present to you is present to you those options and let you decide which seems appropriate. Now, as far as silver goes, really, we've got the MACD locked in a full lockdown. But here's what's interesting. If you recall from our discussion on gold and we looked at our downward channel, we absolutely have a downward channel also in silver. But here's the interesting thing. We're looking at a daily chart, and you can see that we're headed towards the lower end of this channel, breaking through the midpoint over the last 3 days right in here. Whereas with gold, we had moved to the upper levels of that channel. And so we're getting a rise in gold, but we're getting a faltering in silver. My sense in silver, just as in gold, I think it will rise to the upper ends of the channel and then go lower. I believe that silver right now is going to continue until it reaches the lower end of these channels. So for those that are short silver, maintain your short position, maintain your current stop. All traders have pulled profits in gold. So as I mentioned at the beginning of the show, oddly enough, the dollar today is rather quiet when you take a look at it. Almost in essence, it's down just a little bit, but in essence, unchanged on the day. It's not even off a full % on the day. Very, very quiet trading activity in the dollar. And as a matter of fact, what I have put out today in terms of our new expansion to the gold forecast that we have tentatively labeled Trend Chartist, I am putting a detailed analysis of the US dollar for you to view. Yesterday we put up the euro dollar. Tomorrow I'm probably going to work on crude, and we'll also want to cover the equities, which is the mini S&P and the mini NASDAQ. And the reason for doing that is we will be launching officially tomorrow, next week on Monday. And all of this week we are putting out preview issues for you only. The only ones that are actually seeing this are members of the gold forecast. And it will allow you to see what we're looking at in terms of a big picture on all of these markets. In other words, at any time you're looking at a market, it can be moving up or down. But the fact that it's moving down, for example, the dollar moving down right now is a counter trend to the overall bullish trend. The euro, it's exactly the opposite. it's been moving up, which is a counter trend to its overall trend, which is lower. So understanding the big dynamics first, and then getting in sync with the pace of the market to be able to capture these trends is really what Trend Chartist is all about. And so today you'll have the ability not only to view the dollar index video that I created last night that has gone live today, but also sign up for a pre-enrollment price. We've actually enabled that, and you now have the ability to sign up for Trend Chartist at a greatly reduced cost throughout this week. Next week, you will still, as a subscriber to the Gold Forecast, get a greatly reduced cost, but it won't be as much as you get for, obviously, the pre-enrollment. So hopefully we'll have a lot of you come aboard, and we can work with gold as well as the other markets and really not limit our scope, our outlook, or our potential profits. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.